Hello everyone, welcome to the Ichimoku daily analysis for gold for Wednesday, September the 22nd, 2010. Well, this bullish market continues to the upside, and we have a candle making a higher high and a higher low following the previous day, which did raise some doubt about the continuation of the trend to the upside. Previously, in bar chart terms, we had an outside day, and that's where the market takes out the previous high and the previous low of the candle before it. And we had a red body candle, which closed down below the low of the previous candle, actually, so a fairly bearish day with very strong downside price rejection from up around the 1290 level. That failed to lead to a change of trend. The low of the previous candle was very important for any potential change of trend, but that didn't happen. The market actually took out the high of the previous candle and made a higher high and a higher low. We also have a green body to today's candle, so that means that the buyers have made some net bullish progress on the day between the open and the close, compared to the previous day where the sellers made net bearish progress. So a fairly significant day for this market. Unfortunately, though, we only do have a very small bodied candle, which means that there is potential for this market to not continue to the upside. And we also had this shadow on the top of the candle, which represents downside price rejection, some selling coming in. From the looks of this, though, it doesn't look too significant at the moment. There is potential for a change of trend, but certainly not. There's no bearishness in this market based on today's trading. The market did, however, close at the midpoint level, which means that the buyers failed to take control at the end of the day. But by the same token, neither did the sellers. So neither side took control of this market. Now, looking at the Ichimoku indicators, we are trading up above the cloud, so we do have an overall positive bias to this market. This market is starting to look a little bit overextended, though, because we are trading a long way up above the cloud. So quite often when markets are trading a long way above these Ichimoku indicators, they tend to be attracted back towards them. So we don't really have any good indication of that at the moment, so we really should be watching the low of the current candle for any potential change of trend and retracement back towards these indicators. We are trading up above the Kijun-sen and Tenkan-sen as well, which means that the market is bullish in the medium-term and fast-term timeframes, and the Tenkan-sen is above the Kijun-sen. So that's confirming the bullishness in the market. Looking across to the Chikou span, that is above the corresponding price action, which reinforces the bullishness in this market at the moment. Now, what we should be looking for are for these indicators to turn flat, and if the, especially the Kijun-sen turns flat, then there is a strong probability that the market will retrace back towards those levels, but we have no indication of that yet. 1300 up above where the market's trading at the moment obviously is an area of potential resistance for this market, and only because it's a round number. So an important psychological level for this market. So if the market does continue to the upsides, we should look at how the market reacts around those levels. If we do see bearishness coming in and the market takes out the low of the current candle, then there may be potential for some sort of retracement. But at the moment, as I've said, there's no indication of that. We do need to be patient if we're looking at going short, except that's any people who may be swing traders and want to trade counter to the high time frame trend. If we're long this market, areas around 1300 with any bearishness may be potential places where we may look to take short-term profits in this market. So overall, watch the high of the current candle for a potential test of 1300. Watch the low for any potential lower high and lower low, and test of support areas.